So, Shayok, what about the valuations in case of private equity versus strategic investments? We usually tend know that strategic investors value your business better, but do you have any thoughts on the same?
Well, better is I don't know if it's the right term to use.
Right.
Strategic investors value your business in a different way from a private equity investor. Their focus is different. A strategic investor's focus is a much more long focus, so he values the business as a long-term proposition.
Right.
A private equity investor values the business as a more short-term proposition, and that's another point, right? If you look at a business, the point of time where a strategic investor comes in is very different from the point of time in which a private equity investor comes in. It's in the life cycle of a business. Your first investors are your angel investors, then come your venture capital investors, then come your private equity investors. And usually in these kind of markets, when the cap markets are not doing that well, it's the private equity investors who exit to a strategic investor. So it's almost always that the strategic investor is paying a premium because the strategic investor buys into an established business. You would never see a strategic investor investing in a startup because that's not how it functions.
No, there are some cases of hugely successful companies which buy out, emerging startups, let's say, which have got a couple of rounds of funding. Maybe they've not got to the private equity stage yet, but
which
like
would be a
Series
complete
B.
buyout usually. You would completely buy out the promoter, which is a different scenario. You will never see a participation between Google and a startup where Google has, say, 50%.
Okay, I get what you mean, right. So it would be a complete exit, that's true.
So
it would be a complete exit for the founders.
The founders may continue as employees of the company, but they will no longer be shareholders. That's usually how they work.
Right.